So you've got $1,000 that you want to start trading with. The market right now is kind of a mess. It's volatile and mostly trending down. How are you going to turn that $1,000 into $10,000, $20,000 plus? Well, that's where I come in. Today, I'll be giving you 7 strategies to grow your small account. We'll talk about risk management, taking profits, stocks to buy, stock charts, your watch list, and more. If this sounds like something you'd like to learn, go ahead and do me a favor and hit that like button. Also, while you're there, make sure to subscribe if you haven't already. I produce weekly videos with the goal of making you more knowledgeable with regard to the stock market, and your support helps me to continue to produce content like this for you. So without further ado, let's grow your small options trading account. So let's pretend that I have a small account at around $1,000. My first rule is to never trade with more than 10% of your account at any given time. So this means that for a $1,000 account, the maximum amount that you should be spending on an options contract is $100. This will help you to minimize your risk by only exposing a small amount of your account to risk at any given time. Now, I'm not just giving you this rule if you happen to have a small account. Regardless of account size, even if you have $10,000 or even $100,000, you should only be risking a maximum of 10% of your account per trade. For any of my day traders out there who are interested in making money daily, I only want you to risk a maximum of 20%. So if your options contract costs $100, I don't want you to risk more than $20. So if the price of the stock falls by $20, you need to sell that contract. Now, the reason why I have such strict rules is because of the way option contracts are priced. Unless you are buying contracts on a penny stock, most contracts on stocks priced above $20 will cost you several $100s, assuming that you buy yourself time. Options contracts get more expensive the further out your expiration date is. Now, the reason why you would buy an option contract with a long expiration date is for insurance. Consider this, you're buying extra time for the price of the stock to hit your anticipated price target. So if it doesn't end up making its move this week, you can have months and even years for it to make its move. Contracts with longer expiration dates also carry less risk. So when you go to buy an options contract, you are able to see various Greek symbols. One of these is the theta, and this refers to time decay. Buying a contract for 1 year out will often have a time decay of 0.01 or $1 loss per day that you hold the contract for. However, options contracts expiring the same week of purchase may have a time decay of, let's say, 0.4 or $40 loss per day on that contract. Now, this number assumes that the price of the stock remains the same, so obviously price movements up or down could influence the value of your contract. So for those of you looking to day trade, you can most certainly buy shorter expirations, and just be sure not to hold these overnight as they will lose tremendous amounts of value, especially if your strike price has not been hit. Just be sure that you are keeping a close eye on the price movements, and don't hesitate to sell if you lose 20% on your options contract. A $20 loss is much better at the end of the day than waiting for a move that may never actually happen, especially if you're looking to just day trade. Now, my next piece of advice is to take profits at 20 to 30% and no more. I totally get if you're like, well, all I'm gonna get is $20 to $30 and I just risk $100. Well, yes, and it's fine if your gains are just small starting out. So let's say you took profits at 25%. There are 20 trading days on average per month, so do the math. That's $25 of profit per day multiplied by 20 days, which comes out to $500. Your account after 1 month has gained 50% and your total account is now at around $1,500. So by sticking with the rules that I gave you earlier, you're now able to trade with 10% of that $1,500 or $150 per contract. Now, when you take profits at 25%, you're making $38 compared with $25 last month. Now, imagine if you did this for an entire year. This profit taking of just $25 starting out doesn't seem so shabby now, right? And honestly, becoming successful at trading boils down to consistency and making rules for you that you never break. I guarantee that learning to take small profits initially will not only compound, but the same discipline that you apply to taking profits at $25 will be so important, especially if one day you start trading with tens of thousands of dollars. Now, my third piece of advice is to stay away from the big names like Facebook or, God forbid, Tesla. I mean, these are really expensive companies that trade anywhere between $300 and $1,200. Option contracts, even those that expire in 1 week, are in the hundred and even thousands of dollars. This is not feasible at all for a small account. You've got to find stocks that have cheap premiums. Now, a few that I like to trade are Apple, which typically has cheaper contracts starting around midweek, sometimes on Wednesday. Also, you can trade names like Ford, GM, CCL, and Plug. You just need to find these stocks that fit your small account size, following that 20% risk rule. My fourth piece of advice relates to charting. If you're day trading, you absolutely must have a charting platform. My favorite, which I'll be showing you now, is TradingView. Now, there are others like Thinkorswim that I'm a huge fan of as well, so go with whatever rocks your boat. You can also get a free version of TradingView, however, you won't have access to a lot of indicators. I don't use that many myself, but I find that the Pro Plus package at $299 a year is perfect for all of my day trading needs. Plus, not to mention that these charts are very beautiful as well and so easy to learn. So if you guys want to save $10 on a monthly subscription or $30 on a yearly subscription, feel free to check out the link in the bio. And like I mentioned before, there are tons of free software out there, so feel free to use those as well. But if you're interested in paying up a little, then TradingView would be my go-to. So once you get your charting platform up and running, I want you to add the 1 hour, 4 hour, and day time frames. As a beginner, I don't want you to trade off of the 5-minute chart. These move so fast and it can be extremely difficult to trade. The larger the time frame, the more obvious the trend and the easier it is to make a profit. Then I want you to add the EMAs. You'll want to add the 5, 10, 20, 50, and 200. These are levels used by many traders, so it helps to be looking at EMAs that most other people are looking at as well. EMAs function as support and resistance. Now, one of my favorite setups that has a high probability of winning is buying based on how the EMAs look. If all the EMAs are stacked on top of each other to the upside on the hour, 4 hour, and day time frames, I'm buying calls. Now, if all the EMAs are stacked on top of each other to the downside, we will play puts. And of course, we'll stick to our predetermined profit taking at 20 to 30%. There is so much more to charting, including the use of indicators, but I'll be going more in depth in this in future videos. Also, I currently have a mini series on the top indicators to use while trading, and that's on my Instagram at TraderIsaac, so be sure to give me a follow there. I post daily stock market tips, tricks, and inspiration there, so you definitely won't want to miss out. My fifth tip will be to stick to a small number of stocks. Especially when you're just starting out, I want you to know your stocks really, really well. I'd recommend having no more than 5 stocks on your watch list. I gave you a few recommendations already, but I want these to be stocks on the cheaper end and so that you can afford those contracts. So once you built your watch list, I want you to review these stocks every morning before the market opens and see which ones are set up well to trade. Then as the market opens, you have an idea which stocks are solid trades already. I know that with so many stock picks, it can be easy to jump from one stock to the other. It's like sleeping around. I'm just keeping it real here because if you really think about it, how well are you supposed to know your partner if you keep moving from one to the next? Sticking to trading a few solid companies lets you gain a lot of exposure to them. You'll come to know the ins and outs of the stock. You'll know how certain news will cause the stock to move. You'll be able to anticipate future moves on this particular stock because you know its history so well. I want to give you all the best chance to do well in the stock market, and this definitely starts with creating a short watch list. I know it's easy to become distracted by the next big thing in the market, but truth be told, opportunities will always be there. You'll be more equipped to jump on the opportunity in a timely manner if you have less to distract you. My 6th tip will be to not overtrade. A common mistake that I've seen a lot of people make when on a limited budget is trying to compensate for their small account size by opening several large positions at the same time. Taking too much risk will cause you to have a lot of losses early on. Now, obviously, the more your account grows, the more risk you'll be taking on. However, if you have a small account, you probably have one for a reason. And that's probably because you don't have a whole lot of money left over. Chances are this is hard-earned money that took at least a few days to earn. Also, if you catch yourself overtrading and getting into a gambler's mindset where you're tempted to throw all your money into one trade, please just take a step back and give yourself a few days away from trading. This is a very emotional undertaking for the majority of new traders. It's not fun to lose money. Unfortunately, that's the risk you have to take when investing. It's important to recognize when you are wrong or when your mindset isn't right and exit the trade or promise yourself not to open your trading account for several days. Use this time to gather yourself and review what went wrong. Segueing from this, I also recommend creating a journal for every trade that you make. If you were successful, journal why you were and what caused you to be successful in that trade. If not, then journal why you made that mistake. So my last tip is to not expect to have a 100% win rate. Some of the best traders that I know only have 20 to 30% win rates. So how are they even a good trader with win rates that low? Well, the key is in knowing when a trade is going against you and getting out at a predetermined loss point. Also, they're good at letting winners run, but also recognizing when a trend is coming to an end and securing their profits. If you're a beginner, don't expect to have all the trades go in your favor. Instead, develop a strategy and practice cutting losses and securing profits. I highly recommend using a paper trading account to develop these skills before using your real money. Sites like TD Ameritrade and E-Trade offer paper trading accounts with a set amount. I recommend using this type of account for at least 2 to 3 months before you start trading with real money. So anyways, those are my 7 tips to grow a small options trading account. If you take time to apply the principles learned in this video, you'll definitely be surprised by the progress you'll make as a trader. As with all things, you won't master trading overnight. It requires a lot of time and practice to make a few clicks of your mouse worth several $1000s. $10,000. Don't expect instant success. Instead, focus on developing the skills that will let you become a successful trader. I always tell people just starting out not to worry about the profits just yet. I know that you all want that jewelry or even that nice bag, or to even quit your job with the money from the stock market. That will come, but I recommend rewatching this video several times so that you won't miss any of these tips here. They will guaranteed serve as the building blocks towards a successful trading career. Anyways, if you made it this far, thank you so much for watching, and I look forward to seeing you next week. Peace.